we are not going to go back to the way it was. We're now at one of those defining moments. You just have to see it for what it is and deal with it well. Don't deal with it emotionally. Approach it like a chess game. If I make this move, it will have this implication. I can't describe what I see. We see something like $20 trillion of losses. You know, some people mistake this as there is a virus, and the virus may come and go. Okay, maybe we never see it again, but who knows? But if it never came back again, there will be those who are broke and who will have loss of income. We're going to change how we operate in a way. The supply lines are going to change. In other words, self-sufficiency. What is self-sufficiency now going to mean? Do we have enough of this and that? We're going to restructure our economy and restructure the financial system in ways that mean we are not going to go back to the way it was. We're now at one of those defining moments that I've seen repeatedly. The 1930 to 45 period, if you go back in history, there's nothing new to this. There are four things that are the driving forces of our economy and our lifestyle and wealth. And the first and most powerful is productivity, which comes from people learning and inventing, and it grows slowly. You know, 1 or 2 or 3% a year, it grows slowly, and it's not volatile because knowledge isn't volatile. Then there's a short-term debt cycle. The short-term debt cycle is, you know, recessions and expansions and booms and recessions, that they last about 8-10 years. And then there's a long-term debt cycle. And that long-term debt cycle, which goes on about once every 50 to 75 years, is when you begin a new type of money and a new type of credit. That began in 1945. The New World Order, at the end of World War II, and with the Bretton Woods monetary system, created a new monetary system in 1945, a new money. So they wiped out pretty much the old money, or they largely disposed of it, and they began anew, and that's the New World Order, which was the American World Order, and we have seen it, and still 70% of the money and credit that exists in the economy is running by dollars. And then the fourth influence is politics. And politics is largely how we deal with each other. 1929 to 1932, there was a fall in the economy and a very double-digit unemployment rates and a magnitude of fall in the economy like about 10%. Do I think we're in that? Yes. How was that dealt with? 1933. What they did is they printed a lot of money. And the government came out with the same type of programs that we're having now. Yes. Okay. Same thing. Zero interest rates hit zero. Same thing. Okay. Same dynamics. And then there is that money causes an expansion from that point. How long does it take for the stock market to exceed its highs? Or how long does it take for the economy to exceed its former highs? A long time. Okay. Do I think that's what we're in? Yes, that's what we're in. We've seen that happen repeatedly in history. So many, many times. It's just the most recent one. And there's a structure to that. So yes, this is not a recession. This is a breakdown, an operation that I'm just describing in terms of how it's dealt with, the production of money and credit and all of that. That's what we're in. So if you think about that and you say, American printing of money and the borrowing will leave us with a lot of debt and monetization. That's something interesting to talk about. And we need to talk about that. Who will pay these bills and how will that be shared will be something we need to talk about. But we are in a new world. And that world is most similar to the 1930 to 45 world. And a lot of the world will not get that money and credit. So there'll be a big differentiation as to which entities benefit and which entities don't.